Hi, Tony here. Well, we saw US equity markets finish last week lower on concerns over high energy prices and rising bond yields that drew the attention of the US Treasury Department. Now, just 2 weeks after outlining its buyback schedule, the Treasury said it would at least double purchases of 10 to 30-year debt. Now, these purchases are not QE because there's no net liquidity injection. However, the move has unnerved and raised credibility issues, which helped fuel that debasement trade, which we saw into the end of last week, with money flowing out of the US dollar and into gold, silver, and Bitcoin. Looking ahead, all eyes this week are on Nvidia's earnings result, which is due Thursday morning, our time. We'll also get the Fed's preferred measure of inflation, the Core PCE price index. But before that, Treasury Secretary Scott Bessent is expected to announce later today a new sanctions package on Iran and its trading partners. How Tehran responds to this will set the tone for energy prices and risk sentiment in the days ahead. Let's take a look at the charts of the Nasdaq and the Dow Jones to see how they are lining up at the start of this new week. Starting with the Nasdaq, you can see this rally from the March lows up to this high here in early June. And since that point, we have seen the Nasdaq commence a correction, hitting this 27,176 low back in late July on that big hedge fund stop out. It quickly rebounded back into the trend channel, which we view as being a correction. And at this point here, we move to a bullish bias, looking for a retest of this high over here, before a push up towards 32,000. Now, what you can see last week was that it just wasn't able to break above this trendline resistance, and you have seen a pullback back towards the bottom of this gap higher. Providing the Nasdaq holds this gap higher, and I'm talking about this area here around 28,800, I think there's an opportunity for it to regroup and break above this trendline resistance before a push up towards 32,000. Now, if it were to start to accelerate lower after filling this gap, then the bottom of this trend channel comes in around 27,600. Below that, you've got this low from late July, and of course, the 200-day moving average coming in around 26,800. But our base case is after the Nasdaq does some work in this area here, we should see a break above this trend channel resistance before the uptrend resumes. Now, for the Dow Jones, the pattern has been quite intriguing because from this low here in late March up to this high here, we have seen a number of pullbacks all around the 3.5% magnitude that you can see here and that you can see here, and then another 3.5% pullback into this 52,760 low we struck late last week. Now, providing the Dow Jones holds above this low, I'm happy to stay with the bullish bias and look for a retest of this high here before a push up towards 56,000. If we were to see a retest and break of this low here around 52,760-ish on a sustained basis, then you would probably likely see the Dow Jones retrace at least back towards this low we saw in late July, possibly back towards 50,000. But overall, what I think we're seeing in the Nasdaq and the Dow Jones is some consolidation, and that we are looking for the catalyst for that next leg higher. Now, whether that catalyst turns out to be Nvidia's earnings results, it could well be that case. It may well also be cooler inflation data or potentially this sanctions package, which we're going to see more details of this afternoon. But overall, we've got some pretty clear levels which we need to pay attention to, and our base case is for higher prices. But if we break the lows we saw here in the Dow Jones and this 28,800 level in the Nasdaq, then we need to be open to a deeper pullback. That's all for this week. Stay tuned for more updates next week.